Good evening, viewers. Again, I am back, and this time I am going to discuss on a very sensitive issue in the context of direct taxation, that is taxability of gift. Now, gift received by any person shall be taxable, and the gift shall be divided into three parts. Number one, gift of sum of money. Number two, gift of any property other than immovable property. And number three, gift of immovable property. Now I am going to discuss one by one of these. First one, gift of sum of money. If any person has received any sum of money from one or more persons without consideration, and the aggregate value of all such gifts received during the year exceeds 50,000 rupees, then the whole of the aggregate value of such sum shall be taxable under the head other sources. But if the aggregate value is up to rupees 50,000, entire amount shall be exempt from income tax. Now let me give one concrete example. Mr. X has received three gifts of rupees 15,000 each from his three friends. Entire amount of rupees 45,000 is exempt from income tax. But if he has received three gifts of rupees 20,000 each, entire amount of rupees 60,000 shall be taxable. Further, it will be considered to be normal income. Now I am coming to number two, gift of any property other than immovable property. If any person has received gift of any property other than immovable property without consideration, and the aggregate fair market value of such properties received during a particular year exceeds rupees 50,000, it will be taxable under the head other sources. But if aggregate value of all such properties is up to rupees 50,000, it will be exempt from income tax. Now, if the consideration is less than the aggregate fair market value of such properties by an amount exceeding rupees 50,000, aggregate fair market value as exceeds such consideration shall be taxable under the head other sources. Further, it will be considered to be normal income. Now I am coming to third category, that is gift of immovable property. If any person has received any immovable property without consideration, it will be exempt if stamp duty value is up to rupees 50,000. But if the stamp duty value exceeds 50,000 rupees, entire stamp duty value shall be taxable under the head other sources. Value of individual immovable property shall be taken into consideration instead of aggregate value of all such properties. Now, if any person is selling immovable property, its conveyance deed shall be prepared in the office of registrar, and some tax has to be paid to the state government for transferring the property, and it is called stamp duty, and the value on which such duty is charged is called stamp duty value, also called circle rate. A person may not disclose the right value, hence the value is determined by state government. If immovable property has been received for a consideration which is less than the stamp duty value of the property by an amount exceeding 50,000 rupees, and also stamp duty value is exceeding by more than 5% of the actual consideration, in such cases, taxable amount shall be the stamp duty value of such property as exceeds such consideration. Now let us take an example to amplify the situation. Mr. X purchased immovable property rupees 3 lakhs, but stamp duty value is 5 lakhs. Then taxable amount shall be rupees 2 lakhs. Now I am coming to second example. Mr. X has sold immovable property to Mr. Y for 1 crore, but stamp duty value is 1 crore 5 lakhs. In this case, taxable amount shall be nil because stamp duty value is not exceeding the actual consideration by more than 5%. But if stamp duty value is 1 crore 6 lakhs, taxable amount shall be 6 lakhs because stamp duty is exceeding by more than 5% of actual consideration. Now let me explain what is the meaning of property. Property means the following capital assets of the assessee, namely immovable property being land or building or both, shares and securities, jewelry, archaeological collections, drawings, paintings, sculptures, any work of art or bullion, gold and silver in the form of biscuits, bricks, bards. If any person has received gift of any other property, it will not be taxable. For example, motor car or plant and machinery or a watch or a mobile phone, etc. Now, for an example, I'm just going to cite Mr. X received a mobile phone valued rupees 70,000 from his friend. In this case, it will be exempt from income tax. Now, I am going to discuss taxability of gift received by HUF from its members. If any Hindu undivided family has received any gift from any of its members, it will be exempt from income tax. Just for an example, one HUF has received cash gift of rupees 10 lakhs from one of its members. It will be exempt from income tax. If HUF has given gift to its member, it will be taxable. Now I am going to discuss taxability of stock in trade. If any person has received any asset as stock in trade, it will not be taxable as gift. Just for an example, Mr. X is a dealer in gold and he has purchased gold for rupees 20 lakhs, but market value is rupees 27 lakhs. In this case, it will not be taxable as gift because cost will be shown in the books as rupees 20 lakhs and entire profit on sale shall be taxable under the head business or profession. Now I am going to discuss taxability of gift received from employer. Gifts to employees, section 17 subsection 2 clause 8 rule 3 sub rule 7. Gift given by employer in kind up to rupees 5,000 in aggregate during a particular year is exempt and excess over it is taxable. If the employer has given any voucher or token in lieu of which such gift may be received, it will also be exempt in the similar manner. Gifts in cash or gifts convertible into cash, that is gift checks, etc., shall be fully chargeable to tax. Let me share one example here. Mr. X is employed in ABC Limited and he has received a cash gift of rupees 11,000 from his employer. In this case, taxable amount shall be 11,000 at and it will be income under that salary and shall be taxable at the normal rate. But if Mr. X had received one wristwatch of rupees 11,000 from his employer, taxable amount shall be rupees 6,000. Now I am coming to taxability of gift received in connection with business or profession. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. If any person has received any gift or perquisite or benefit, either in cash or in kind from any of its client, it will be considered to be business receipt and shall be taken into consideration while computing income under the head business or profession. Example, a doctor has received a gift of rupees 40,000 from one of its clients. In this case, it will be considered to be income under the head business or profession, that is all about